Good afternoon. Welcome to Mid-Cap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. It's the last day of the trading week. The Nifty has come off from the highs, almost a 50-point cut from the highs of the day. Mid-caps are sulking and we do have the advance decline ratio in favor of the declines now. So market breadth continues to be in favor of declines.
That's right. Good afternoon, Sonal. So much happening. It's been a very volatile trading session, like you mentioned, and the mid-caps underperforming the benchmarks. But we have a lot lined up on the show, so let's start off with the top headlines. Stocks trade ranged with advances and declines almost evenly balanced ahead of the weekend. Metals gain while energy drags. Mid-caps relatively underperform key indices.
The PNGRB hikes gas transmission tariff to 65 rupees per MMBTU, lower than the 78 rupee figure sought by GAIL. The stock slumped 6% even as the management tells CNBC-TV18 that they will pass on tariff hikes to customers. The PNGRB also tells us that there is no recourse available for GAIL.
Eureka Forbes shares surged almost 10% today after the management in its investor meet says that the company targets to grow its revenue by 2x and EBITDA by 3x by FY30. They believe that this guidance is achievable provided positive macro tailwinds.
Sudeep Pharma shares list at a healthy 23% premium against its issue price of 593 rupees a share. The company's IPO was subscribed 94 times during the IPO process. Okay, all right. Those are the top headlines that we are tracking. The mid-cap index, that is the focal point, because when we started the trading day, the advance decline ratio was in favor of advances, but now it is in favor of decline. So important to track which way things go by the end of the trading session as well. We have some of these sectoral movers, something like a Nifty Media, which is the top gainer right now. Auto is doing well, but even then, that has come off from the highs. Nifty Pharma doing well. Metals continue to take charge. But the CPSE, oil and gas index, and also the energy space seeing some pressure, and there's a lot happening in the space generally.
That's right. One stock I'd like to quickly focus on was IX. Some time ago you saw the flashes on your screen stating that, the next hearing will be in January 6th. A lot happened and a lot transpired in the hearing today. One of the key points put across by the Council of IX was the fact that they do want to go ahead and take into account the SEBI ex parte order regarding the insider trading allegations as well. On the back of that, IX remains in focus, largely flat post the hearing. But moving on, this is our special segment, Mid-Cap Movers. Sudarshan is standing by the wall to take us to the mid-caps that are moving around in the session.
So first I'll talk about the stocks. Those are reacting on the basis of news, and on top of that is GAIL, that is reacting to the order released by PNGRB, which has increased the tariff, but that's below expectation. That's the reason stock at one point was down 6%, currently trading with a cut of almost 5%. MCX is under pressure because there have been several reports regarding the SEBI's action, and that is one of the reasons why stock is under pressure, almost down 4%. Varun Beverages, in one of the conferences, I assume it was Goldman Sachs conference, and it has said that growth might be back on the track after Q3, and that's the reason the stock is up. It's up currently more than 3%. 63 moves. There was NCLT order. It was a positive order, settlement order regarding the case of NSEL, and on the back of that, the stock has surged almost 16%. Hindustan Zinc is higher because silver price is trading near record high. Some of the other mid-cap gainers, SRF is reacting to positive brokerage note. Stock is currently up more than 3%. Nectar Life, since the time stock has released its quarterly earnings, it has been moving in one direction. Today also it has hit the upper circuit, currently up almost 20%. Reflex has seen a block deal of almost 0.2% equity, and that's the reason stock is up more than 3%. Sigachi is currently high with healthy volumes. Today's volumes is 65 10-day average, and currently the stock is up almost 12%. Last one, Eureka Forbes, as you have mentioned, on the back of the healthy guidance, the company is looking to increase the revenue by 2x and EBITDA by 3x by FY30. And because of that, stock has seen a sharp move, currently up more than 8%. So the mid-cap losers, most of the capital market names are currently under pressure. Angel One is one of the top losers, down almost 3%. Page Industry has been moving lower since the company had announced Q2 earnings, and for the last 2 to 3 sessions, stock has been down almost 5%. Today also it's down almost 2%. Aztec Life and GMDC are seeing profit booking and down in the range of 2 to 4%.
Okay, all right. Thank you so much, Sudarshan, for joining us with all those names. It's a good time to welcome Himen Kapadia from DR Choksi for a technical check on the markets. Himen, good afternoon. Thank you so much for joining in. What are the markets factoring in when it comes to the technical viewpoint? What are the next important levels to watch out for? Do you think last 1 hour of trade could turn more volatile?
Very good afternoon to you, Sonal. Thank you for having me on the show. It's always a pleasure. I think so because, see, 26,277 was a high on 27th September 2024. We went to 26,300, but we haven't exactly done well after that. It's natural if you have all-time high coming after almost 13, 14 months. You expect some sort of hesitancy, little bit of trepidation. I mean, we need to take that out. And, as of now, like you guys also mentioned, it's been like maybe 8 stocks which are moving the market. It's been an insipid move. It's like a dal without tadka, there's no taste. Mid-cap, small caps have been floundering. Mid-caps have done a shade better. So, and everything is riding piggyback on Reliance and the Bank Nifty. So this needs to get broad-based, and just an all-time high, frankly speaking, isn't enough. You don't see a sweeping bull market like you would normally see. It's just narrow pocket. So as of now, the structure is fine. Levels 26,300 needs to get taken out. More importantly, 26,104 needs to hold for the current ongoing positives to continue. And if the Bank Nifty is doing what it is doing, I think things are evenly poised. I'd be more positive than negative, but the advanced line needs to improve. The rupee needs to strengthen. So a few many if and buts. I guess everything centers around the trade deal. Maybe that should trigger off a mid-cap move. Sonal.
Right. Thank you so much, Himen, for your views on that, and very good analogy as far as the current market up move is concerned. But Himen, which are the individual stocks you're recommending at current levels? Mainly from the large cap pack, or do you have a few mid and small cap names as well?
No, I will be safe and go with the large caps, Vivek. Firstly, there's a buy call on LTTS. Stock has, firstly, it's out of the FNO. So the volatility cools off and you see genuine fundamentals discovering price. The stock has formed a medium-term bottom. The oscillators on the weekly charts have given a crossover buy. After reflecting positive divergence, everything seems set. Yes, the IT index has made a bottom. TCS has turned, Infosys has turned. Everything looks hunky-dory. So I believe time for LTTS to play catch up. One can buy LTTS at around 44.20. Stop loss 43.20, target of 46.20. I believe it's a modest target. We should be going towards 4,800 or more, probably in December itself. The second stock is Lupin. Sun Pharma has turned for the better. Glenmark has shown traction. And Lupin has, frankly speaking, been hatching eggs, doing nothing over quite some time. It's formed a beautiful rounding bottom on the weekly chart. The oscillators are supporting the move. It's set for an intermediate uptrend. So one can buy Lupin at around 2075, stop loss 2025, target of 2175. Once again, I believe we should be going to 2300 or more. Looks quite comfortably poised for an upside. Vivek.
Okay, all right. Thank you so much, Himen, for joining us as always and taking us through your technical picks. Have a great weekend ahead. With that, we'll slip into a short break. When we come back, we'll talk about individual stocks that are moving around in the broader market. Stay tuned for that. Welcome back. You're still tuned in a mid-cap radar. Well, while the broader markets is lower in trade, we are seeing a lot of action in specific stocks, and there is a new listing as well. Sudeep Pharma listed at a 23% premium to its IPO price, and it has seen a one-way move from those levels. Look at that. It's up 34% as we speak. So strong listing and some gains on that listing as well. Now, the company manufactures food-grade minerals, specialty nutrition ingredients, and is present in over 100 100 countries. Two-thirds of the revenues are coming in from pharma. Rest is food, nutrition and specialty ingredients. 80% of their revenues are coming in from repeat customers, and they have around 5 manufacturing facilities, out of which 4 are in India and 1 is in Ireland. Now, the subscription was very strong, 94 times, and that reflects in the listing price as well. They raised around 270 crore rupees from anchor investors. They raised total of around 900 crore rupees, out of which 800 crore rupees was offer for sales. That did not go into the company, and the rest was fresh issue. That is something that they will be using to procure machinery for production of a line located at their Nandesari facility. This now is valued at around 45 times their FY25 EPS, so trailing EPS that is. Company says they do not really have a listed peer they can be compared to. But let's look at the performance now. They have seen an increase in revenues, but it is not by a big margin. From say 450 crore rupees, now it's 500 crore rupees. The EBITDA has increased, largely flat actually. Margins have actually come off on a YY basis. Profits also barely an increase on a YY basis. But the listing has been really strong. They say that 75 crore rupees will be used for capex. They've also started new vertical specialty ingredients in FY22, which has grown to 170 crore rupees, which is the higher margin business. And phosphate, basically, it is a rare approval that comes by for companies, but this company has received this approval. So yes, not a big increase in terms of numbers from FY24 to FY25. Even in FY23, they had margins of around 20.8%. That is something which has increased, and Street thinks maybe that could continue, but important to watch out for the revenue growth prospects, the margins as well, and what happens with valuations from here on, so that we'll be tracking closely.
That's right. Thank you so much, Sonal, for explaining all of the details as far as the latest kid on the block is concerned. But moving on, this is our special segment, Mid-Cap Spotlight. Upasana will focus on Eureka Forbes, which recently held its analyst meet.
Well, certainly, company held its analyst meet yesterday, and here are some of the key important takeaways. Firstly, the company targets to grow revenue by 2 times and EBITDA by 3 times by FY30. And the company believes this guidance is much achievable if the macro tailwinds are positive, and they continue to remain positive. Now, let us look at some of the other important takeaways in which the management has reinforced the company's transition from a product-led water purifier brand to a broader health and hygiene player. It also aims to achieve a revenue target of 1,000 crores of revenue from its robotics segment by FY30 is what they have indicated. And it has also said that it will continue to focus on creating brand awareness through advertising and promotion spends. Now, despite higher investments in capex, R&D, and even advertisement and promotion, the company expects to achieve mid-teen EBITDA margin on the back of the portfolio mix and operating leverage kicking in is what they have indicated. And lastly, company has also highlighted that its newer categories like air purifier and water softeners provide a healthy runway for growth for the company. Now, on the back of this, ICICI Securities believes that the company is structurally better placed for long-term growth, supported by integrated product services, digital-led model. Hence, it has given a buy rating and also upped its target price from 685 to 700 per share.
Okay, all right. Thank you so much, Upasana, for joining us. So that's our mid-cap spotlight stock. Let us now focus on the metal space. There's Hindustan Zinc, Indian Metals and Ferroalloys, or INFA, at day's high. Nigel is here to tell us what's aiding this move. Nigel?
Well, that's right. Earlier this morning, we had highlighted that 2 stocks could potentially be in focus. One would be, Hindustan Zinc, and the other one would be INFA. Let's address Hindustan Zinc first. That one has moved high, and it's holding with some gains today. Why is that? Silver prices on the verge of going to a fresh all-time high. Remember, it went to that ballpark $55 per ounce odd, and then we saw a bit of a correction on silver. Now, silver's back out there, various factors at play, whether it's with regard to the consumption or whether it's with regard to a bit of a supply deficiency in the market, or even the much-awaited Fed rate cut. Put all that together, silver's doing well, and Hindustan Zinc is the only listed play to play silver out here. So that's why that stock is holding up. To give you a number, more than 40-45% of its total EBIT number comes in from silver. So that's about Hindustan Zinc. Next, moving to INFA. And, across, for the last 18 months or so, we have been highlighting this point that chrome ore prices are moving up. And because of that, ferrochrome prices could get some sort of a base. Now, in addition to that, there are some smelters that actually have been shut down. Case in point being, a couple of global smelters. You have Saman Core Chrome, which has announced that they will be gradually shutting down. They're giving a one-time to their employees as well. So a couple of their facilities will be shut down. And Glencore Mirafe, they have already gone ahead and shut down some of their furnaces. So basically, globally, ferrochrome players, they are finding it very unviable to go ahead and produce ferrochrome with the elevated cost of production. Now, so that's why there'll be lower ferrochrome production in the globe. But you'll say that China will produce more, right? So China could probably make up for that shortfall, but China has an export tax out there. So that's not going to change the global dynamics with regard to ferrochrome. Net-net, IMFA stands to gain because on the cost of production front, they don't get hit. They're backward integrated, chrome ore from their own mines. So that's why they'll enjoy the higher pricing of ferrochrome and not get hit on the cost of production. Explains why IMFA is up because of a shortfall in global capacity, while Hindustan Zinc is gaining because silver prices are doing quite well. Back to you.
Well, thank you so much, Nigel, for joining in and giving us all the details on the developments as far as the metal space is concerned. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, one particular stock, that's making all the news today, given the fact that there was an Aptel hearing as far as the implementation of market coupling was concerned, was IEX. IEX continues to remain in focus. Well, just to give a quick background as to what exactly is market coupling, remember in July 2025, CERC had said that there will be implementation of market coupling that will be notified, and there will be regulations that will be put out come January 2026. Now, remember, IEX is the dominant player, has the highest market share when it comes to the short-term power market, which is the day-ahead market with over 85% market share. In fact, in most times, the market share trends over 90%. Now, with the implementation of market coupling, what it essentially meant was that the price discovery process as far as the short-term market would happen in all three exchanges in a circular manner. And in fact, CERC had also said that Grid India could be the fourth exchange, indicating that there could be a potential loss of market share when it comes to IEX, post which you did see a significant correction in the shares of IEX, post the order that did come in. Post which IEX went ahead and approached Aptel, and the hearings have been going on in a subsequent manner. The latest hearing that happened today took into account a SEBI's ex parte order, which indicated that there were wrongdoings that took place during the process of the implementation and the hearings that led to the conclusion of the implementation of market coupling. In today's hearing, what essentially transpired was that the final Aptel was not, there was no announcement as to what exactly the order was, but there was a fresh date given where, number one, the fresh date is January 6th, and what essentially will transpire is that IEX will go ahead and take on board all of the allegations that will come in, especially in terms of the insider trading case, post which both the counsels will have an opportunity to meet the Aptel course. So essentially what is expected to transpire that this case will prolong for some more time, and as of now, it is status quo. There is no change post as far as the implementation of market coupling is concerned.
All right, that's about IEX. We'll keep getting more updates on that. That's an important update and case to track. But we have run out of time on Midcap Radar today. Stay tuned. Your stocks when we return.